Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be looking at the 44th Commitments of Traders Report of 2019, and as we always do, we shall start the analysis with the largest changes in commercials positions. You may see we have the gasoline on top of our list with a 35% change in commercials positions, 38 in large speculators. Huge changes, I would say, this week, or in this report. We have just received the largest change that we've experienced in the past 52 weeks. Of course, it is a bearish COT change signal suggesting that prices could fall early next week. We'll see about that, but let's move on and have a look at the 5-year chart and see how extreme this market has become. You may see that we are gradually getting closer again towards bearish extremes. We had this relative bullish extreme back over here in September. You can see it was a successful signal because since then prices have gone higher. Of course, we've seen much greater bullish extremes in the past. And you may see some examples for bearish extremes. The last one from April was again a very successful signal. We're more or less in between the two extremes, so I'd say it's mainly the COT change signal that we should be having our eyes on right now in case of the gasoline. Moving on to our next market, this is rough rice with a 27% change in commercials positions. Back to the 1-year chart, you can see commercials just gone again above the zero line, barely net long. Large speculators went below it. They became net short at the moment. This change size, again being much larger than average, is something that is worth mentioning. It could be the largest. I'm not sure. If you look at this past 52 weeks, we may have seen similar changes in the past. Nevertheless, it's a significant change signal that we should be worried about. Well, not worried about, but we should definitely take it into consideration in our trading. It is, of course, a bullish COT change signal. Moving on to the 5-year chart, a wider perspective of the market shows us that the extreme is more or less in between the two major extremes. The most bullish extreme back over here from May of 2015, a wonderful signal, by the way. Then we had some bearish COT extremes happening in this market. So you can see rough rice is actually a pretty good market when we analyze the extreme, the stress levels basically in traders' positions. Now we're more or less in between the two extremes. We had this relative bearish one, nothing too unusual. So again, a market that we can basically focus only on the COT change signal. The extreme is not that clear, or not giving us such a clear signal. So let's move on and have a look at copper market, where we have an 18% change in commercials positions. Back to the 1-year chart, here we have that change signal. Again, this is a bearish COT change signal. We've seen larger changes in the past. Nevertheless, it's much greater than average. It suggests that we could see further decline happening in the copper market. Moving on to the 5-year chart, you can see that we've just been at these significant bullish COT extreme levels in September. I don't think we can state that it changed the trend. There hasn't been a significant move upwards yet, but nevertheless, that's the main COT extreme signal that we had back then. It is a bullish COT extreme signal. We've been moving away from those levels right now, of course, pretty far away from any bearish extremes. Like the one I'm just showing to you from June of last year. By the way, again, a wonderful signal over there. Moving on to large speculator COT Extreme, we have the VIX on top of our list with a all-time COT Extreme in large speculators. We also have an all-time COT Extreme in commercials. So let's analyze this market. Very, very exciting. Don't forget, anything that is bullish here could be considered bearish in stock indexes. So here we have commercials at basically 200,000 contracts net long, and large speculators almost at 200,000 contracts net short. Now, what does that mean? Well, let's just look at the past and see how VIX performed after such bullish COT extremes. You can see, well, this one I would say is one of the clearest ones from April of this year. You can see how well that signaled this rise in the VIX. Again, another great example from October, which, by the way, I'm sure you know that was sort of the starting point of stocks dropping last year. If you remember, that was a huge bullish COT Extreme signal back then. Of course, we can witness many examples of bullish COT Extreme signals in the VIX, which can conclude to us that it is a successful signal in the past, and we should definitely take it very seriously right now. This of course does not mean that we should expect a sudden rise in the VIX next week. This could of course continue on for multiple weeks. You can see how a all-time extreme develops, or the extreme in the market can grow for many weeks before anything happens. So that's just a warning for you to be cautious. Nevertheless, it is a very good signal that stress levels have risen in all over indexes basically. Soybean oil will be our next market with a modest 108 report extreme in large speculators. The same exact extreme can be witnessed in commercials. This of course is a bearish COT extreme signal, no question about that. It could grow to even greater levels. As you may see, we've seen much greater extremes in the past in soybean oil. It's interesting. We should definitely examine this more closely with our own trading system to see whether or not we can find opportunities. It is definitely giving us a picture that soybean oil may be headed downwards in the medium to long-term future. And last but not least, let's open Canadian dollar, where we have this 96 report extreme in large speculators, 103 report extreme in commercials. Again, an unquestionable bearish COT extreme. The last time we had something even greater was in 2017. Again, this could continue on for many more weeks before we see any reaction in the market. It is of course a bearish signal suggesting that the Canadian dollar could decline in the medium to long term against the US dollar. So that was our last market for this review. Of course, don't forget you can look at a whole bunch of other markets at cotbase.com and dig deeper in the COT analysis. We've got a lot of settings, a lot of equipments for you to choose from. I appreciate your attention. Thank you for being with me in this COT review, and I wish you a pleasant weekend. Take care and goodbye.